There's been a lot of talk recently about the idea of BitBonds, government-issued bonds designed to accumulate Bitcoin while lowering borrowing costs, from people across the Bitcoin community, including myself. Most discussions have focused on convincing the US government to issue them. Meanwhile, companies like MicroStrategy have already issued convertible notes and now a new form of preferred equity, both effectively types of fixed income instruments to accumulate more Bitcoin. But there's another massive group of entities that could have an even bigger impact. Sovereign nations that are already capable of issuing large amounts of debt. This brings us to the idea of a speculative attack, a concept made popular in the Bitcoin community by Pierre Rochard, founder of the Bitcoin Bond Company. Pierre defines a speculative attack as borrowing a weak currency, like the dollar, to buy a strong currency, like Bitcoin. Since fiat currencies are debt-based, the act of borrowing dollars creates additional supply, weakening the dollar, while the simultaneous buying of Bitcoin makes Bitcoin scarcer. It's a positive feedback loop. The nations best positioned to do this are developed countries that already issue large amounts of dollar-denominated debt. Two strong candidates are Saudi Arabia and the UAE. Both have borrowed significant amounts in dollars, likely totaling hundreds of billions. And at the same time, the UAE has already begun buying Bitcoin-related assets. For example, Abu Dhabi state-backed fund helped fund a joint venture with Marathon Digital to mine Bitcoin, and other UAE sovereign wealth entities are already buying Bitcoin ETFs. In effect, the UAE has already begun performing a speculative attack on the dollar, albeit quietly and indirectly. But this can be taken much further. Imagine if the UAE or another country issued 50 billion of new dollar-denominated bonds at market rates and used the proceeds to acquire Bitcoin. That act alone would almost certainly move the price significantly. Bitcoin's market is too thin for someone to buy $50 billion worth without dramatically lifting the price. And once Bitcoin appreciates, the strategy feeds on itself. You raise 50 billion, buy Bitcoin, Bitcoin doubles, and now you have 100 billion worth of Bitcoin against 50 billion of debt. You've created a $50 billion net gain. Seeing this success, you could issue another 50 billion in bonds and repeat. It becomes a self-reinforcing cycle. Weaken the dollar through new debt issuance, strengthen your balance sheet with appreciating Bitcoin, and repeat. While many focus on the US as the first natural mover for BitBonds, the reality is that other nations can and likely will move faster. Just because the United States is ignoring the opportunity today doesn't mean others will. Any developed nation with access to dollar-denominated debt markets can start performing this strategy at scale. And just like it was only a matter of time before Michael Saylor and MicroStrategy began aggressively doing this in the corporate world, it's only a matter of time before a sovereign nation steps in at full speed. Whoever moves first will benefit massively, and it should be the United States of America. But if America hesitates, others will not. Thanks for watching, everyone, and see you next time.